Hey, everybody. Welcome back to our Wealth Tech panel discussions hosted here at Bambu. As always, I am Ned Phillips, the founder of Bambu. So I think if you've been following some of this series, you would have seen, we first of all talked particularly about customer and what you should do for the customer. But now we're looking at something that's becoming more relevant, which is personalization. Still focused on the customer, but looking at something called hyper-personalization. Because I think across all of fintech, we're all a customer of one. We're all an experiment of one. We all want our own experience, whether it's in wealth, trading, banking, or payments. So today we have two guests on the panel today, and we're going to introduce them to you. So Laura, if we can put up our next slide, that'll be great. So today on the slides, first of all, we have Michael and we have Ganesh. And Abhijit, unfortunately, is not joining today. But Michael, why don't you give a 1-minute intro to the viewers of yourself?
Sure. Thank you. My name is Michael Hom. I am the head of financial services solution at InterSystems. I have about 25 plus years of experience in investment banking, building various systems from low latency trading systems to highly performant analytical compute platforms to front to back asset management systems. At InterSystems, we help customers with their data-driven needs by providing a rich set of technology services along with business-specific solutions. So thank you for having me.
No worries. And thank you, Michael. I know it's 9 a.m. Monday morning in New York, so thank you for starting your week with us. And Ganesh, who is based in India. Ganesh, would you like to give an intro?
Hi, my name is Ganesh. Thanks for having me here. I'm the MD CEO of the Mutual Fund Utilities, which is a fintech platform, the very unique platform in India, which offers all the asset management schemes for both investors and also for advisors. So we have a suite of features. So we offer both. So my job is to kind of ensure that adoption rate in India and the penetration in India, considering the vast of this country, is to kind of ensure this technology platform evolve over the period of time, make standard process across asset management companies, and ensure technology helps that to reach to the common man where they can start investing in mutual funds. So,
awesome.
Thanks for having me here.
No problem. Thank you. Appreciate it. And yeah, I think if we look at the problem statements where we are today on the problem statements, is that how do we transform kind of hyper-personalization in financial advice? And if we look at, we've put together a few of the different problem statements here. The reality is that financial services was kind of set up as a homogenous industry. Banking was relatively homogenous, and I would say wealth management, unless you had 7, 8, 9 figures of money in the millions of US dollars, then you got some personalization. But in general, for even mass affluent, there wasn't the personalization. So we're going to look at 3 particular questions today. And the questions that we've got today are, first of all, we're going to look at the different increase in personalization and financial advice. Then we're going to look at what has worked. And then, as always, we're going to do a bit of crystal ball gazing. I'm always scared of that because I think if we'd asked you 18 months ago, what will the next 18 months be like? I think we would have all got it wrong. So it's always dangerous to do a bit of crystal ball gazing, but I think we always do it anyway. So diving into the first question, and maybe, Michael, it might be worth going to you first. I mean, you look at data. You can't do personalization without data, but particularly in financial advice. What's your thoughts on how that has changed the industry?
So I think there's a plethora of rich and relevant content and services like Bambu's. And I think that's very promising. I think it's, along with the augmented customer interaction that comes with it, it's now able to provide these services to a larger and wider set of customers, which is honestly fantastic, right? I think just imagine having the appropriate advice, how you want it, when you want it, where you want it, for everyone. I think that is great for the customer, right? But I also will take a different spin on that. I think it's also an opportunity to help solve some of the greatest divides that we have. First, It's by providing this personalized and continual education, in this case, financial knowledge, really helps with another divide, which is that wealth divide. And I think that that combination of hyper-personalization allows to kind of really tackle or take on those things. And I think it's very like promising as we move forward. I think, we talk about personalized financial education. I think that's one thing that really helps us all. Like, I think, imagine if you were trying to contemplate to buy a house. It's a daunting task, right? You would want someone who's an expert right next to you. Imagine if you actually had one, right? Help you understand how the mortgage works, right? Do you need one? Would you like to see some rates, right? You have some money that you saved. Do you know what to do with it, right? How can I build on that wealth? And I think that's very empowering overall. And making that available to a wider set of people is, I think, for me, it's a nice path for into the future. I think you mentioned the increased usage of data. I think that's apparent, right? To have personalization, you need that. And I think most companies have embarked on their digital transformation, which includes a data strategy. And I think that's going to be a large differentiator as you move forward. Those who haven't, need to accelerate, in my personal opinion. But then the last comment I'll make, on my thoughts is that we do need to probably overcome a little trust and privacy concerns, right? I think to make this all work, and I think as I mentioned, like very good for the customer, I think there are some barriers and some things that we kind of have to forge forward on. And I think, unfortunately, regulation might help there, right? To create a safe structure with some checks and controls that allow for a wider set of usage.
Yeah, well, look, thank you, Michael. I love your idea of closing that wealth divide. Like, I think, if we could all ask to be doing some good, that is it. And I think, we've got a long way to go. I think the reality is wealth is still too complex. It's still too complex. I love that idea of it. I mean, Ganesh, in India, how do you see it? I think as we were talking before the panel started, investment, and I think in India, it's a kind of a newer business, investing in different mutual funds. And how do you see it from your side?
I think, the last 2-3 years, I think there is a huge surge of a lot of technology-based wealth decisions, or you call it as a wealth-based advice. So there are a lot of talks, if you actually look at a lot of robo-advisory, which you will hear in India. Certainly, it's not really matured to that level, but still people have started looking at how to convert the data, use artificial intelligence, use blockchain, provide some robotic advisory. Okay, but what interestingly, if you'll be surprised to hear, in the last 2-3 years, the number of fintech technology platforms, okay, particularly the app-based, there are close to 450 apps which got emerged in just 18 months, okay, 18 to 24 months in India. And all these guys offer asset class across, the digital gold, mortgage, loan against your securities, mutual funds, whatnot. Okay. So they offer everything. Even Amazon, who actually started as an e-commerce in India, has now ventured into I think they merged, or they just took a joint venture with one of the firm in India, in Bangalore, which is Vasant's firm. So it's quite interesting to see, a lot of these kind of coming up. But even regulator per se have given license to some of the fintechs like Zerodha, for example, as an asset management company. So which is quite unique in India, right? So in asset management company in India, it's always those big guys who actually do a traditional way of doing a mutual fund business, right? But now the regulator is also very keen and given license to those guys who are technology driven. So I think we are seeing a lot of turnaround, a lot of data is available, but I don't know about the other countries, but in India, data is huge. There's a lot of data, but still the data is not converted into a meaningful representation of investment. People talk about you talk to millennials. In fact, Ted, I was reading one article where it said in the last year, particularly in the pandemic, India's investor base has increased by around 200%. and out of which almost 40% are millennials, so which means people aged between 20 to 30 or 25 to 35 are investing more in the financial services, okay, particularly the platforms, using the platforms. So it's a huge jump in particularly a country like India. So we are quite excited to see where it's going to transform into. But yeah, the data has not been used and got into a robo advisory. I think so the next 3 to 5 years is going to be extremely exciting in India because we see a lot of this robo advisory coming in. So as of now, I would say it's probably in a very, very early stage, but the future looks extremely bright.
Yeah, thank you. It's a good, interesting. Somebody said something to me the other day that kind of caught my attention. So if you look at the millennials aged 25 to 35, when they were young kids in 2008, all they heard from, not all they heard, but they probably heard either if they watched any kind of semblance of news, that banks were failing. So if you think about their formative years, banks fail. You know, and again, when you're 8, you don't really care if a bank fails because it's not in your, as long as you get your pocket money or your food, but it's part of them. So today, 15 years later, a perfect storm of new tech, mobile devices, COVID, and these people who are now 25, 30 were brought up with banks fail, trust tech, let's go. Whereas 10 years ago, if you launched an app to take care of somebody's money, people would have been, no, I trust the banks. And I think, you know, history is always the best lesson, but it was a really interesting comment someone made to say, we've actually created, not we've, but a perfect storm of reality that the ability to invest, but also the desire to invest. I actually still think we don't have great personalization. It's getting better from that side. But it leads us on to the next question that we have. And Michael, like you do a lot of work in terms of implementing this with clients. Like, how does it, like, I think we all agree, should we have better personalized financial advice? Yes. How does it actually work?
No, I mean, you're 100% right. Are we there yet? No, I think we're getting there. I think as Ganesh said, like in the next 3 to 5 years, it's going to proliferate, which is fantastic. Again, for the consumer, right? You know, in my eyes, you know, how I see this kind of potentially looking like in the future. Just imagine if you had a personalized 24/7 financial advisor with you. You know, I'm not saying it sits on your shoulder, right? But imagine if it's always on, always with you, whenever, wherever, however you want it, right? Like, you know, help you with events. Like if you're going to buy, you know, your give you advice on the impact of your past decisions, right? So for example, like Ned decided that he didn't want to buy a Tesla six months ago, right? Well, with that savings and investing in the market, you made 78% on it. And just giving you that advice over the day, over the time, just starts to educate you about what is the impact of your decision, your financial decisions, right? You know, obviously then, you know, moving from the past to the present, imagine if it was able to give you options or recommendations on your current decisions at the moment, right? So again, taking that example, say that you wanted to buy a red Ferrari. You know, they could tell you the estimated expenses, your estimated monthly expenses with this added payment, right? It could say, hey, what if you didn't buy it, you could retire 10 years earlier. Or maybe it gives you an indication or reminds you that, hey, your children are going to college, tuition's coming in 5 years, you might want to save, right? Or, I mean, if you're dead set on buying that Ferrari, tells you the best auto loans rates to get, right? Like, it's just imagine if it's just always with you and telling you, giving you advice. You know, I think that is very empowering for a lot of people. And then moving to the future, right? Like, say Ned wants to fly to the moon, right? It's going to cost you some serious dying, okay? Like, I heard some of the rates from SpaceX and so forth. Like, maybe it advised you, hey, Ned, maybe you skip on that third yacht. Don't buy that. You'll be that much closer to your goal in the next 5 years, right? To fly to the moon, right? Like, I'm being a little facetious there, or maybe not with Ned, right? But like, just imagine if you had that with you. Like, I think we see some of it now, right? With Alexa, with Netflix, Amazon, even like Garmin Health, right? Like it tells you, gives you insights as it's collecting all your data, looking at your data, try and provide some relevant metrics to either motivate you in a particular direction toward your goals, right? Or just giving you customized recommendations, right? I think that in that form, you can also apply that to financial, right? And embed it. Yeah.
Exactly. So sorry, I was going to say, like, your point is that you make me think of this word like integrated. Wealth is still a little bit separate, right? And I heard a phrase a while ago. When you think about investments, sell to the sleeping point, i.e., if you can't sleep, you shouldn't own it, right? Because that's going to impact your health. When you said Garmin Connect, right? And I think you might be overthinking how much Bambu's worth if you think I've got 3 yachts and I'm going to the moon and Ferrari. But I like your thought process. Maybe we'll get there. Although I don't want all that stuff because it's going to be a little crazy. But I think your point is right, is that we're still so far away from having that personal finance. We're getting better. Like it's so much better today. But I think that's right. I think there is this idea, because look, Netflix is really good at knowing what I want to watch. I like watching documentaries and that stuff, and I always get documentaries, right? But my wealth app, it's good, but it's like, hey, do you want to buy a mutual fund or an ETF? I don't want you to ask me. You should be able to tell me. And maybe, Ganesh, what's your thoughts on this? Because what are the examples? Like for example, you say in India, Amazon or Paytm are into it, and these guys have data, right? They genuinely, what's stopping us being more personalized in financial advice?
No, I think it's definitely the option what these guys want to have, right? But in India, wealth side personalization is still not there. We are not even 5% of. I can just put it on record. We are not even 5% on what because today, as you told Ted, due to the COVID situation, everyone has a device, okay, and all these devices are connected to internet, so they have access. They have time now. I think this is the right time for us also to go into the hyper personalization of data and get them. I'll tell you a very interesting example. Just last month, I did one program for one of the biggest bank, okay, for the employees. It's an MNC bank. For the employees, they wanted to know about mutual fund. There were around 100 people. There was a young lady who, in a question and answer, so she came up and asked me, can I invest, say, $1,000 per month? And after a year, can I buy a gadget? Okay, so the gadget costs probably Apple 15 or Apple 20, whatever you call, right? So I told her about that's too ambitious. Okay, so I given her my example, saying that today. So she was saying that it's so convenient, Ganesh, that I'm just traveling. I can just do a investment through using the Grows or ATMs. It's so easy. I said I do agree. The convenience has made. So initially, when I started my mutual fund investment way back 20 years before. So I used to write a paper, go to the office and then give it. Today, things have changed. It's more of convenient for people. They want to start. But what she interestingly told me that is, her dad used to buy an insurance product, a very traditional plain vanilla insurance product. She doesn't want to get into those insurance products. She wants to buy a very attractive wealth management product. So she loves mutual fund. She says, I like that name. She doesn't even understand how the mutual fund works, but she says, I want to invest. And some of those apps which show some chatbot and people just popping up, there's a lot of information which comes in. She says, with that, I can able to take a decision. But she's confused that saving $1,000 for 6 months, whether she will be able to buy probably a red Ferrari. Okay. So I told her that doesn't work that way, right? So what I then understood myself is even if you're going to give a hyper personalization like what Mike told, somebody sitting on my shoulder or next to me, I think somewhere the awareness also need to be there from a wealth management point of view. So what's really you're investing in and what you are heading towards. So we are still not there, but there is a huge scope. Things are improving, but the great good news, I think for all of us, and particularly people in India, like you, Ned, the data is available so much. Okay, it's how you're going to use that data and make a meaningful representation is something which is there. As per the government records, it says every Indian who has a mobile downloads at least 5 to 8 apps on a given day, right? So they are quite excited. So they download the app, they test it, they uninstall it. So it's keep on happening. So I think this is the right time for next at least a year or so to get into people, and also not only to give the features. I think we need to also make them aware of what they are investing. Then once they understand what it is, I think the stability of using that will increase. So I would say a lot of people kind of use it, uninstall probably doesn't use it, but once they understand the product, where we also need to invest, that's one thing which we are also doing from our company point of view, Ned and Mike, is we're also creating a lot of tutorials, a lot of short videos, because they say the span of attention for a human using mobile phone is not even 30 seconds. Okay. So within 30 seconds, whatever we can give to them, we can give to them. And then we kind of show them, boss, okay, now you understood what it is. Then look at these data and look at these AI and then start investing. So
and so maybe that, just a follow-on question from that. You both mentioned about kind of, I mean, I love the idea of financial advisor on the shoulder. Obviously, we don't want to talk about finance 24 hours a day. Financial education hasn't personally really, I think, hasn't really worked, because on average, people still don't understand what a mutual fund is. They still don't really understand how to balance their budgets. It's an interesting one. Like, how do we, like, I think people would rather just be led rather than kind of educated. What do you guys like? Because we talk a lot about education. I agree. It would be great to educate people, but we haven't found a way to do it because people, they're still confused by wealth.
I think it's a multi-pronged effort, right? Like, I think you need to provide that advice in the form that they want it, right? I think to your point, like, some people want information to make their own decision, make an informed decision.
Yep.
Others kind of maybe want to have someone tell them what to do, more prescriptive, saying, hey, you should do that, right? Like, or do it for me. Just tell me what you did, right? That's the two opposite ends of the spectrum. And obviously you can have anything in between, any percentage that you want. But I think to your point, Ned, I think that's a great thing to have now, being able to do that because you know more about them, being personalized, being customized to them. But I think that other thread that I wanted to bring up was that education. I think, Ganesh, you mentioned it too, like continually over time, slowly, perhaps, just educating them to be more aware, have better understanding of what they're doing. I think is for our overall, from a social economic standpoint, from an economy standpoint, from institutions too. I think it's a really good thing to get to. And I think this is a nice platform that potentially can span that, because we've been doing this for a long time and we haven't been able to bridge that gap because the form that it takes is not, being uptaken by a lot of people yet. And so maybe in smaller chunks, like Ganesh mentioned, maybe it's like a little text, hey, FYI, right? And that's what I meant, like always with you, informing you, educating you slowly, right? Imagine that maybe, like you said, you have a short video. Imagine you can even have it to the person, building on the trust factor. A person, digitized, maybe who do you trust? Maybe it's Ganesh. Maybe it's your mom and dad. Maybe it's Warren Buffett. Maybe it's Rihanna. Like whoever you trust and be able to connect with, get you to, it's real. I make fun of it, right? But part of it is just to build that trust, build that bridge to them so they'll intake the information, right? So at the point in time too.
Exactly. Do you remember the you guys watched The Big Short, the film, right? You know how they did it. They had famous actors and actresses talking. It's just when you mentioned Rihanna, we're probably getting a little off topic now, having Rihanna in financial services. But I think your point is, let's be honest, financial education is boring. Right? Like it is. It just is, right? It's very hard to make a mutual fund exciting. We need it. It's essential. And the reality is people like exciting content. Now, finance should be boring. It should be boring. And I'm wondering whether there is a generational opportunity here that we could do these little, like they did in The Big Short. Somebody just says, hey, here you go. Here's your 10-second, like you said, Ganesh, 30 seconds. Here's a non-finance person explaining something in finance that's dull in a cool way, and slowly it will seep in. And maybe in 2 generations' times, Everybody will understand mutual funds and wealth, not because they've been educated, just because it's, I mean, Ganesh, you're mentioning it in India. If you're downloading 4 to 7 apps a day, over time, it's just going to seep in, right? Whether you learn it or not, right?
Agree, completely agree. Right. So that's why we also found, so I'll tell you that interestingly that there was another gentleman who asked me why I need to invest in mutual fund, why I should not put my money into a bank. Okay. So I told him, boss, if you invest in bank, no one is going to stop you. So assume that you're investing in a bank, then every day you need to go to the bank and ask the branch guy or the bank manager saying that where is my money? Can you just show me where is my money invested? The bank is never going to give you. Okay. So I told him on the contrary, if you invest in mutual fund, you can actually see your money, where it is invested, how much money it has made. Okay. So I just made him to understand the difference. That's where I realized people want to invest, but somewhere that bridge which Mike exactly pinned out, so that is not there. Okay. It's not a long gap, it's a short gap, but we need to somewhere bridge this. Once you bridge this, then people will start slowly moving towards it. And then you will see a huge chunk of people, then there will be a stability. So that's where I think we should make. And also the other thing is the risk profiling. I don't know about where you live, but in India, a risk profiling was is just a 10 questions which will ask you what is your salary, do you have additional revenue, how is the age, you work, do you pay a mortgage? Well, so somewhere I think we also need some innovation, some probably behavioral based risk profiling or some storytelling or something like what Mike told. Probably you're not having Rihanna in India, so you can probably have someone else who can really come in and say, boss, I'll kind of help you to kind of do a risk profiling, which will make these guys to be glue into that. I know it's boring, but still make it a little fancier or interesting for them. Mm-hmm. So they will understand that. So that's what you.
And maybe in India it's Sachin, right? We get Sachin Tendulkar to do it, and everybody loves him. But maybe as a separate question, I have a slightly different take on that. In that, I don't think people should do their own risk profile, because I actually think people are really bad at it. Because when you say to somebody, not about answering their salary or their age, they know that. But what would you do if the market falls? Oh, I would hold on. Yeah, but most people don't. How do you characterize your own risk? I'm wondering, and maybe Michael. I'm thinking, let's say Google launches a wealth management tool. They're not going to ask you. They're just going to tell you, hey, we know exactly who you are. We've crunched all the data, and this is it. I'm just wondering whether the idea that we've got it wrong in wealth management, please assess your own risk, is logically flawed, because as humans, we're super bad at assessing ourselves.
Yeah, so I agree at this point in time. That's fully true, right? For the majority, I hate to say this, I know people are going to get upset about it, but most people don't know how to manage their money.
Correct.
Right? I think there are a few that do. And if you look at, you should expand that to the unbanked and underbanked, however you want to call it, that divide becomes really large, right? And I think having the ability to have something more prescriptive, as you mentioned, to tell someone what to do, I think that is a great option, right? But I think part of that along parallel track is to continually educate them so they fully understand, to build that trust that you're letting someone else fully manage your money, but at least you should understand.
Yep.
Right? I think part of the problem these days is that people hand it off to someone because they don't know. And when it doesn't work out the way they want it to, it's a really bad scenario because you signed up, right? I think if you had more knowledge, you can, I call augmented, meaning you get advice, they tell you what you're doing, but you have optionality and control, right? I think that really kind of plays into, a more educated set of people can still have it fully automated, have someone take care of it, right? But make sure that you have understanding of it. I think that's the key point I really focus in on as we go, because that's that trust issue. Because when everything's going up and everyone's making money, that's phenomenal. But when it's turning the other way, then you really have all these issues like, oh, you told me to do this and you lost me X, Y, Z. Well,
Absolutely, yes, yeah.
do you understand what you got into? Not every year you're going to make 5%, 10%, 50%, 80%. It's on the other side that you really need to be more concerned about. And I think Ganesh hit a great point about like risk management, understanding your profile. And I think, Ned, to your, I love the point of you may think you're one scenario. Based on your actions, you may be a different risk profile. And I think that realization, and I'll come back to education, like, you know, some sort of services is, look, you took a couple of questions and you think you're a risk taker. Based on your actions, you're not. like, and it's just kind of like that education, and not to be in an embarrassing situation where someone's telling you, maybe you do it offline. That's why I love this digital aspect. You can learn on your own, and there's no fear of being embarrassed or like someone knowing that you're just not well versed, right? And I think that is could be a very useful service, kind of that personalizability.
And I think you're right. We're going to see, look, we're all old enough to understand that this long up market is going to stop at some point, right? Like, you know, this time it's not different, or this time it's different, whatever they say. And it's going to be, because right now everybody's a hero, right? Oh, I invested in a trading app or a robo app and I made money. I must be a genius, right? Everyone's a hero today. And look, and again, I'm not being critical of, I don't think either many of these, whether it's Betterment, Robinhood, Zeroda, little old Bambu, we've all benefited from fintech has been in a market that has gone up. And so everyone's happy to play. But I think you're right. Let's say this market takes a dive, which it will at some point. That personalized financial advice, all of a sudden, we're going to be talking a very different story. And look, it's always a little ugly on the downside. But that's not a tech problem. That's just a human problem. Humans would, I heard a phrase the other day, everyone loves a change, just no one loves a change for the worse. So we're seeing change. It's getting better. The technology will keep getting better. And maybe it kind of jumps onto the third question that we have, which is a little bit of kind of crystal ball looking. And, this, thinking about personalization, maybe Ganesh, we'll throw it over to you first. We've already talked a little bit about the future. You said India's just starting. And again, look, I don't want to be pessimistic and market's going to go up and down. That's just a fact, right? That's just a fact of where it is. But how do you see it playing out, particularly for like kind of the personalization in wealth management in India? And in how do you feel about that over the next 5 years?
I think that's going to be the future. I can tell you that in the next 5 years is going to be extremely exciting. When you were talking, Ned, I was thinking, if 5 years down the lane, if three of us come together and discuss this, I think we'll have a completely different perception, I would say. I'm very, very, very optimistic about it. And I'll give you another example. So one of the the level of personalization people need. So there are people who write questions saying that, boss, I'm hopping job. So I have a 2 months of notice periods. In that notice period, I may not get money, the salary. So do I need to continue my SIP? Okay. So these questions really, puts into me that level of personalization, as Mike told, or Ned, you told. So we need to really use these data cases to see probably, for someone who is just early stages in the career, okay? So the questions might be, or the personalization is going to be different. And over the period of time, we also make him, so for example, a guy who is going to invest, say, in his first 5 years in the wealth management using any personalization, he will not be the same guy of the next 5 years. Okay, so the same kind of set of questions is going to be put at him. He's not going to be very happy with this. So I think we also need to evolve the way the people are and their behavior is. So that's where I think the personalization, the data is available, right? But how we are going to kind of use that to customize this much better is something. So as I told you, that lady, she told. She's not at all interested in doing any plain vanilla old banking investment product or insurance. She wants to do ETF. She doesn't even understand what the ETF is. But she understands stock exchange. She finds people making a lot of money. Okay. So she was very into, but she wants to make a lot of money. She wants to buy this. She wants to buy that. But somewhere, that perseverance or the patience, or when the market goes down. So the other thing which I was thinking is, somewhere I feel, it's our responsibility also when we do the personalization. We also need to show them the darker side. So in case this happens, see, if you look at in India, so we have this one line: mutual funds are subject to market risk. Okay, please read the offer document. That's the only line where we give a warning to the investor. Okay, but over the period of time, we never give them some worst case scenarios of market crashes. What happens? Okay, some scenarios. So they were never ready for the worst scenario. As a human, we want everything to be good. Okay, well and good, but life doesn't work that way, right? But are we also in frequent intervals tell them, boss, if you're going to lose your money, stay invested. Okay, so like that. No, I think that's also a responsibility. So I think not only kind of giving advisory, but getting into that kind of education, continuous engagement with them, and also to understand how what kind of happenings are in their lives. So for example, if somebody has loses a job, so you can probably have a personalization saying that, if I lose a job, should I need to continue? What happens? Okay, what happens for 6 months? So I might probably have money for next 6 months. Do I need to continue? So like that, I think we should get into that kind of scenario. There's hundreds of scenarios available, but technology can play a huge role. So
and it's funny, we've been building this kind of future-looking predictive planning tool. So AI-assisted predicting your financial planning. And we put in it the negative events: lose your job, divorce, pandemic. And, a bit like divorce or losing your job is not black swan, it's just an event. But what we did when we showed it to banks to say, hey, here's a smart financial plan. Oh, no, we don't want to talk about divorce or losing your job. So we had to put a button that you could turn on and off the negative events. And all we're trying to do is a probability. So if you're, like, sad to say, if you're 40 with one kid, there is a probability of divorce. Like it's not zero, right? Like, it's sad to say. But if you're 18 or whatever, like, it's more likely that you're going to increase your money. But it was interesting. How many people want to turn on the negative button? Yeah, as humans, we're just not very good at turning on the negative. I mean, Michael, your company deals with data. I mean, obviously, it's going to change the whole industry. How do you see the next years playing out?
Yeah, I guess as broad strokes over the next 5 years, I think open banking is going to help as it advances globally. I think that's going to help make data available to more, hopefully in a safe manner. Like, I think there needs to be a lot more regulation and constructs. So unfortunately, sorry, right? That's just my opinion. But I think that helps us, consumer and the overall kind of market itself. Like, I think there's a lot of trust, privacy, security issues that just needs to be as a baseline that needs to happen to allow us to advance to the next stage. I think having data on one side and then having the services on the other, that's where we play, right? Where we help on both sides, right? We help bridge that gap. From a consumer standpoint, we talked about it, right? Vastly improved service for all, leveling, empowerment. I think there's going to be a massive diversification of services. So you can just point, it's exploding now. And I think in the next 5 years, it's just going to continue. I think the sophistication will also improve, right? Like Ned's Bambu robo-advisor. I think in 6 months it's going to be that much better. In a year it's going to be that much better. And I think it's just going to be great as we move forward, right? I love the app, right? I love the ability. I love the service it provides. And we talked about smoothly integrating and embedding into the fabric of our lives. Like, I talk about that. Will it happen in the next 5 years? It depends on how fast we accelerate. Like, exactly. I am very optimistic on Ned, right? Because that service, you got in at the right time. You're moving that forward. You have a head start on everyone else. And that's just driving people to do better. And I love it, right? Like, I really think that that's great for consumer. From an institutional standpoint, I think we still need a lot more automation. I don't think we're there yet. But a lot of people are more digitally focused, more data driven, which is the right direction. Like everyone's on their transformation strategy, their data strategy, and so forth. And I think with that, we talked about this more diversified, augmented customer interaction, right? You guys mentioned like the millennials, I'll pick on them. They're just a different breed. They're much more tech savvy. They just want things in a different form, and God bless them, right? You want it to be online. You want your advice to be texted to you. Great. A human doesn't have to, but I think there's going to be, you need that gamut. In my personal opinion, I think you need a gamut of abilities, human interaction to fully digital, because on certain events, you're not going to feel comfortable coming back to that trust. You want to talk to someone. Am I doing the right thing? Well, I don't know. I think that still needs to kind of advance. But I do see a gamut of interactions, right? I think it's be heavily weighted toward the digital one. So that's where the robo-advisors will be like really, accelerate and take on most of it. The last point I'll make is I think the industry is going to change in the next 5 years, right? And this is just my take. I think there's going to be folks that are going to be aggregators. There's going to be folks that are service providers, and there's going to be folks that are data providers. And I think that's just going to be, in my humble opinion, of how the world's going to start shifting, right? And you're most likely going to be one of those, because I think it's just all the competition that we have. You're either going to be data or service, or a nexus of the two.
I think it's great points, both of you. And again, look, we're absolutely not going to get it 100% right. So if we sit in 5 years and do this panel again, I don't know if we'll do it exactly in 5 years. I'm sure we won't be exactly right. The key points is like nobody could have anticipated the change that we had in the last 18 months, right? Like I think when COVID first hit, I was like, I remember at Bambu going, oh my God, I'm not going to be able to raise money again. Nobody's going to win. Everyone's going to shut down. And for a couple of months, everybody just froze, right? Everyone was like, and then all of a sudden it was like, I need digital today. And like tidal wave of like stuff to do and more people going to. So I think we're all very clear that rate of change is increasing. It's better for the end customer. Absolutely. I think we all agree that data in wealth is still like, there's no doubt that wealth management isn't as good as, streaming or social media. We don't have data in the same way, right? But it is getting way better. And Ganesh, to your point, that lady, people don't even know what an ETF is, but our friends are buying it and it's growing. And I think we are getting to the stage when even with an up and down market, it's going to be, so let's say we look back in 30 years time. If we sit today and look back in 30 years, 1991, the tech that we have, we laugh at it. It's crazy, right? So in 30 years, we're going to laugh at what we had today. They're going to be like, exactly. Oh my God, remember when you could only buy a mutual fund on your phone? How silly is that? That's ridiculous, right? We'll be doing it in some undescribed way that we can't even think of on some devices. And they'll be like, and remember, you used to use the internet. How funny is that? Because there'll be something different from the internet. I don't even proclaim to know what that might be from that side. But maybe just to finish off, maybe just a quick line from each of you on what is we've summarized these, maybe not summarize each of the question, but I think we're all positive on the industry. But if you had kind of one key prediction, one key summary, if we could say wealth tech will be, or sorry, like kind of personalized financial advice will be, in my view, I would say my summary, personalized financial advice will be completely unrecognizable. And I'm going to say 10 years. So I'm going within 10 years, we cannot even dream up what it's going to look like. Ganesh, I'm going to go to you first. Do you have?
I completely agree with you. I think personalized finance has a lot of dependency on how the market, the technology is being used in the market also. So for example, I would say today in India, you might not know your NAV, net asset value. If you have done a investment at 9 o'clock in the morning, you need to wait till 9 o'clock in the evening to get your NAV. right? But I think the market is heading towards same time NAV, right? So if you're going to, so these things are going to really make a huge impact. I think we need to wait for some time and see how the main product, I would say, now how the technology is going to play that. But I completely mirror with you. I think 10 years from now, it's going to be extremely exciting. And after 5 years, I can bet you that no, we'll not be same. Probably the technology what we use here to connect might be completely different.
Absolutely. Thank you. And Michael?
Yeah, I would agree with both of you. I think it's just going to be available and accessible to all. And I think that's a phenomenal stage to get to, right? Where everyone has advice and also have that education that they need, right? When they need it, wherever they need it, how they need it. I think that's just a great, place to be for all of us. From a financial standpoint, from the broader standpoint, right? Being able to have financial stability, financial understanding, I think is very empowering.
Available and accessible to all. That is great. I mean, honestly, like we're so far from that. Imagine that everybody could have it available and accessible to all. That would be, and with the financial advisor on your shoulder, well, I'm going to say the world will be a better place. I imagine. Anyway, well, listen, we're up on time. Thank you, Ganesh. Thank you, Michael. It's great to chat on that. I will drop a note in the calendar for what are we, August or whatever, 2026. We'll do this again in 5 years. I'm sure we'll speak before then, but then we can look back and see if we were right or wrong. So thank you, guys. I really appreciate it. And thank you, everybody, for watching.